Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking DoorDash today, the behemoth, the 800-pound gorilla as far as food and everything delivery now at this point. The stock's had a spectacular run, up 57% so far this year. Do you have the data that backs this up going into earnings, or is the bar too high here?
Yeah, probably both. I think, we have the data to back up the fact that DoorDash is absolutely the dominant leader in food delivery, really just kind of taking over the entire field, 55% plus of the market share. And that seems pretty stable right now. So really, if you're talking about DoorDash, the market share that they have is so stable, you have to think, where's the growth come from? It comes from either a tailwind of just delivery in general growing, or can they expand their offerings? And they're trying to expand their offerings. And that's on the grocery side, which I think is a little bit of a different animal. For the DoorDash driver, it's pretty easy to go to Chipotle, pick up a couple of burritos, put them in the side of your car and take it to the person that wants it. Versus walking through a grocery store, picking out all the items that they want, and then loading that up into your car and taking it to their door. So it's a very different animal, but there is a lot of upside there. We see Instacart doing well and others in this space. The big question is, what's Dash's next big move? What's going to be the next big catalyst for this? Because like you said, the stock is up so much. We see web visits up 9% year over year. We see general growth and demand up 9% year over year, but the bar is very high because the stock has already anticipated much of those gains. So as we head into this earnings event, we're pretty neutral on DoorDash, which is a really positive signal considering how much the stock has run. So this is a great company in a really nice industry. We're just a little bit afraid that the stock market's already priced in most of the next year's worth of market share and revenue gains.
Andy, this is difficult for me to say, but DoorDash is becoming like electric windows in your car, which means once you do it, you don't go back to the other way. It's so convenient and so easy. As long as you're not sensitive to the fees, it's hard once you do this to go back to getting food a regular way. And their numbers are growing. Here's my question. You're right. The stock is run an incredible way. There's a lot built in. We sat on this show for many months and quarters and talked about how was Uber ever going to become profitable. And DoorDash is not profitable yet. Are we going to wake up one day and they're going to get enough of scale to become profitable? Is it just going to come on us just like Uber did? Because the adaption just keeps rolling. And by the way, you mentioned groceries. I heard beauty products is the other thing they're going to try and deliver, and that might seem easier even than groceries.
Yeah, what you're seeing, that absolutely would be easier than groceries. I think groceries is a pretty difficult thing. I'm a little bit more worried about Instacart getting into restaurant delivery than I think Instacart should be worried about DoorDash getting into grocery delivery. That's it's just a different problem to solve. And like I said earlier, it's a lot easier to be a DoorDash driver than an Instacart driver. I think that's pretty clear. But overall, when I think about DoorDash and profitability, I honestly believe that if they wanted to, they could kind of shut down growth operations right now and be a really nicely profitable company for a very, very long time. But I think that once you get into the mode of growth at all costs, which, DoorDash, Instacart, all these, Uber, all of them have been in that mode for a considerable amount of time. Once you're in that mode, it's very difficult, to switch gears. And so I think DoorDash does eventually become profitable while pursuing growth, but it's going to take longer than if they simply said, we're going to continue to dominate the restaurant and meal delivery space. We're going to do it very profitably. We're going to treat our drivers the right way. You know, another thing they're going to move to hourly payment for some of their top drivers to give them, you know, some consistency in their revenue. I think that's a really cool idea. So DoorDash is innovating, but ultimately they have to make a choice, and that is, are we comfortable at 55% market share? There's only so much higher it can go in food delivery, or do we have to get into everything else and try to do that well? So profitability looks to be a little bit on the way out there in terms of where DoorDash can go from here.
Yeah, and it could be a surprise. I mean, Reddit turned profitable last quarter. Nobody expected that at all. But Andy, when you look at this, it's also a reflection on the economy in general, right? And the consumer in general. You know, job market's robust. Saw another decent ADP report today. That was more than double expectations. Wage growth is there. Is this almost a function that the economy is doing so well that's helping DoorDash at this point, where people aren't, you know, kind of pushing back and saying, I'll make dinner tonight, or I'll just order it, and those crazy amount of fees? Is that the reason maybe that we're seeing the strength in DoorDash is, hey, the economy's doing well, so until that turns down, they're going to continue to grow, right?
Yeah, I think so. You know, and I think, like Kevin talked about, we've gotten very used to DoorDash. We've gotten very used to the windows going down when we press a button. We don't want to have to roll them down anymore ourselves. And so DoorDash has put itself in the category of actually one of the last kind of luxuries that you would give up. I think people will stop going on cruises, stop renting Airbnbs far before they stop getting their burrito delivered. So I think it's become, you know, just an almost table stakes convenience for a lot of the population. I don't see that changing anytime soon. I think they won the argument that this is many times the better way to get a meal.
Yep, hard to give that up. Real quick, Andy, earnings score on this one, because it's overbought on a technical level, and just look at the chart, and it's pretty elevated.
Yeah, the bar is very high. We're coming in with a neutral rating on this, which actually, you know, like I said before, is a hat tip to what DoorDash has accomplished, because the run that the stock has made and how high the bar is set at, we think that they can get there, but we just don't see a whole lot of upside or downside on this call.
Gotcha. That makes sense. That makes complete sense. All right, great stuff. Great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at LikeFolio, breaking down DoorDash data. Our